capital management, gentlemen, we are looking at the day-to-day operations of the company. We are looking at our short-term obligations. We are looking at our short-term assets. So everything called working capital is about what your current. And that is why most of you were right by telling us that working capital equals current assets minus current what your liabilities. Working capital equals current assets minus current liabilities. And then I would want somebody in this case here, we have said that it is a difference between a company's current assets and a company's what your current liabilities. That is very important. The only thing that I would want us to write there is that it represents the short-term liquidity. It represents, so working capital represents the short-term liquidity, the short-term liquidity available to a business, 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 and its ability to meet, and its ability to meet, its ability to meet day-to-day operational expenses, day-to-day operational expenses, day-to-day operational expenses. This is a very important chapter in your subject, working capital management, which I will be able to combine very, very well with our cost of capital and other things, and ratios. Now, ladies and gentlemen, the very first thing that I would want you to appreciate whenever we talk about working capital is what we call the operating what here? The operating cash cycle. The operating cash cycle. Operating cash cycle. Yeah, operating cash cycle. Everything I've said, it is here. It is here. I can just write here working capital represents the short-term liquidity available to a business and its ability to meet day-to-day operational expenses. So, ladies and gentlemen, when we talk of operating cash cycle, we are looking at the number of days our cash will be outside there. Remember, we must invest cash, right? So whenever we talk of operating cash cycle, we are looking at the number of days that our cash from the time we invest. Remember, we shall start investing in raw materials. We buy raw materials. We have, in this case here, our labor, etc. The number of days, ladies and gentlemen, our cash will be out there before we receive it. Before we receive it from our customers is what we call the cash operating cycle. Cash operating cycle. And I would want us to get this definition very well by looking at this book, which all of you happens to be having, which all of us in this case here, we happen to be having these books. So this cycle, how many days is this cash that I've been able to put out there going to stay out there before it comes back to the organization? So before it comes back to the organization, how many days? Just a minute. Cash operating cycle. Ah, great. I get it. Great. And the working capital, we must be able to be good at this. So we are told, ladies and gentlemen, here, the cash operating cycle, this book, you have it, and if you don't have it, I'll be able to give it to you. So the cash operating cycle reflects a firm's investment in working capital as it moves through the production process towards sales. Cash operating cycle reflects a firm's investment in working capital. So how much are you going to invest in receivables? How much will you be investing in inventory? It reflects a firm's investment in working capital as it moves through the production process towards sales. The investment in working capital gradually increases, first being only in raw materials, but then in labor and overheads as production progresses. This investment must be maintained throughout the production process, the holding period for finished goods, and up to the final collection of cash from trade receivables. Note, the net investment can be reduced by taking trade credit from suppliers. Very, very important. And they're giving us a way of getting this cash operating cycle. For a manufacturing business, the cash operating cycle is given as follows. How much have we invested in our raw materials in terms of days? How much do we have in work in progress? How much do we have in finished goods? How much do we have in receivables? And then, of course, any payables we get, this will be a relief on us because payables means other people coming to finance our operations. So you can see payables days. These ones we normally do what you subtract. So for us to understand, ladies and gentlemen, what we are talking about this afternoon, let's just go ahead and calculate the cash operating cycle here. You write there, test your understanding, cash operating cycle or operating cash cycle or operating cash cycle. Ladies and gentlemen, please listen and listen to me very well. Whenever you talk of cash operating cycle, you shall always remember this. Cash operating cycle, basically we are financing our working capital. And our working capital, as you guys told me, we are looking at current assets minus current what year? Liabilities. So in terms of cash operating cycle, we shall look at, for example, three things. We shall look at, of course, under current assets, we have inventory. Under current assets, we have in this case here, for example, under current assets, we have receivables. Receivables, very, very important. And then, of course, we have what we call payables. Payables, which comes here, right? So this inventory, we could either have inventory of raw materials, inventory of raw materials, or inventory of finished goods, or inventory of what here? Work in progress. So basically what we shall be doing, we shall take this number of days like that. We shall take all those number of days like that. All right. We add this with the number of days in the receivables. We are financing our receivables. And then, of course, payables, these ones here must be subtracted the way we are subtracting this. The way we are subtracting this. So remember, these have to be in inventory days, receivable days, payable days. So like now the question that we happen to be having here, you can see the question that we happen to be having, ladies and gentlemen, here, what are they telling us here? This is very, very common. You can see we have receivables collection period. So receivables collection period, I will write receivables collection period. So we have here receivables days. Instead of using the word period, I like using days. So receivable days, we have 56. 56. We have inventory days, inventory days, inventory days, inventory days. These are current assets, so positive. So inventory days, I can see, ladies and gentlemen, 21, 21, 21. So we have here 21, 21. Then you can see, ladies and gentlemen, we have a work in progress. Work in progress days. This is basically a part of inventory. So work in progress. So we have work in progress. So this will be taken in this case here as what here? As positive. This part of inventory, work in progress, part of inventory. So we have here 14, 14. Supplier payment, those are payables. So payables, we shall always subtract payables. Payables, we shall always subtract. So 42. So payables, we shall always subtract payables. And then we have finished goods days. Finished goods days. So finished goods days, this part of inventory will be positive. Finished goods days, we have here 28. We have here 28. So then are you able to add everything, ladies and gentlemen, here for you to be able to give me this cash operating cycle? Are you able to add everything for you to give me the cash operating cycle here? So you add this. So receivable days 56, inventory days 21 positive. Work in this part of inventory 14 positive. Payables shall always be subtracted. So payables shall always be subtracted. And then finished goods days, we shall always add, of course, this part of inventory. This part of inventory. So how much do we have, ladies and gentlemen, here from this small example before I take you to your past papers? Before I take you to your past papers. So according to Purity, we have 77. How about the other ninjas? What are they able to get? The other ninjas. The other ninjas are not talking to me. The other ninjas are not talking to me. The other ninjas are not talking to me. These other ninjas, how many days do we have there? These other ninjas, how many days do we have there? Please talk to me. These other ninjas, how many days do we have there? 77. Thank you very much. So this 70, remember the book has answers at the back. The book has answers at the back. You can see here the operating days, the operating cycle days, cash cycle days, they are 77. Every other thing you are adding, except for what here for payable days. Payable days, you subtract. Lakini sasa cash neighbor haiwezi kufanyia hivyo. Cash neighbor haiwezi kuonea huruma hivyo. Cash neighbor itakupatia these days. We must be able to know how to calculate these days ourselves. So now I'm connecting this with our topic of ratios. So we must be good in terms of doing the computations of these days ourselves. So before we look at our past papers, similar questions. They leave your questions here from this book. So like now here we are given working capital ratios, operating cycle. So here they have given us receivables, we have trade payables, we have inventory, we have sales, 80% is on credit. Then we have material purchases, all on credit, cost of sales, 25. So they want us to calculate the relevant working capital ratios to the nearest day, whole number. So we start with, you can see I will calculate receivables, I will calculate payables, and I will calculate only inventory days. These are the stuff which are found in the working capital. As working capital, no other stuff is found in what, this one will help me to get the ratios. These ones here will help me get the ratios. So we start with receivable days. So ladies and gentlemen, how do we get receivable days? How do we get receivable days? Is there anybody in this case here who could be knowing the formula for getting receivable days? Receivable days. We normally receive out of selling. So anytime they want us to give them receivable days, we shall take the receivable given, we divide this by credit sales times 365 days. Not unless the examiner tells you 360 days. So anytime you want to get receivable days, you shall take the receivable given. You divide this by the total credit sales. And then whatever you get, you multiply with 365. You multiply these with 365. Fortunately, we have the receivables of 4. In this question, we have a receivables of 4. And when it comes to sales, the total sales here, we have 30, but 80% are on credit. So 80% times that 30. Whatever answer we get, multiplied by 365. Whatever answer we get, multiplied by 365. In that case, is there anybody who can give me these days? Remember how do you do it? You'll take 4 divided by open brackets, 80 over 100 or 0.8 times 30 close brackets times 365. You give me a whole number. Give me a whole number. Please give me a whole number. What do we have here? Please give me a whole number. Please give me a whole number. Please give me a whole number. You're giving me a whole number. All right. So in this case here, are you able, ladies and gentlemen? So they're getting here 60 watt here. They're getting here 61. I don't know whether it is all of them who are able to get this 61. Yeah, I can see very many students giving me correct answers. 61, whole number. From there, ladies and gentlemen, look at the question. What else do they want us to give them? They want me to give them the payable days. Payable days. So the moment I know how I generate my payables, then I'll be able to get the answer right away. My payables normally comes out of credit purchases. I purchase goods on credit and then I pay later. So in this case here, the payable days, the payable days, we shall take the payables given divided by credit purchases. Credit purchases. So as the examiner given me, I think this light is very bright. Just give me 1 minute. So as the examiner given me the payables, oh yes, the examiner has given me payables of 2, trade payables of 2. How about credit purchases? Credit purchases, ladies and gentlemen, we have materials purchased all on credit, 18 times 365. So is there somebody who is able to give me this figure as a whole number? Remember, they told us to round off to whole numbers. They told us here to round off to whole numbers. They told us to round off to whole numbers. So what are we getting, ladies and gentlemen, here? They're giving me a figure of 41. Thank you very much. 41. Then lastly, and the students confuse really very simple things. Inventory days, inventoriable days, you will take the inventory given, you see, where do we find inventory? Inventory, we normally take under cost of sales. Because inventory, we normally take, in this case here, what and what here. We normally take inventory, you add purchases, opening inventory, add purchases, closing. So in this case here, basically inventory days, you must divide this by cost of sales. You must divide this by cost of sales. You must divide this by cost of sales. So then if that is the case, ladies and gentlemen, what do we have here? If that is the case, ladies and gentlemen, you can see in this case here, inventory is 4.3 here. Inventory is 4.3 here, 4.3 here, and then the cost of sales has been provided. The cost of sales, you can see down here, it is 25. Cost of sales is 25 times 365. So 4.3 divided by 25. Please take advantage of understanding this thing from first principles. Because what makes students fail in financial management, you will see, for example, in our subsequent session, we'll be looking at a situation where you are told that the management has changed credit policy. Instead of, say, for example, 30 days, they have given their customers here to 40 days to pay them up. I mean, what is the opportunity cost? So we have to start from this operational cash cycle. And if you understand this very well, you will never have issues in this topic. For those of you who have ever failed, they know how important this topic is. So then, ladies and gentlemen, what figure are we getting here? What figure are we getting here as a whole number? 63, 63, 63. And therefore, our cash operating cycle, and therefore, our cash operating cycle, our cash operating cycle So here I only have three things. I have inventory days, I have payable days, and then I have receivable days. I've not just organized them in any order. Just remind me, what figures do we have here? Inventory days ni ngapi? Inventory days ni ngapi? Just remind me. You don't have to organize them in any order. Inventory days ni ngapi? Inventory days in 63. How about your payable days? How about your payable days? 41. How about your receivable days? 61. 61. What do you know about payable days? Those ones are normally a relief. They are to your advantage. The more they are, the better you are. So payable days, you must always subtract them. You must always subtract them. So you should be able to give me the cash operating cycle. Should be able to give me the cash operating cycle. Is there somebody who can give me this figure? 83. So basically, from the time I buy my raw materials, it will take me 83 to recover back my money. The lower this number is, the better. Ukifanya kama ile biashara ya kuuza bangi, but don't try that at home. Biashara ya kuuza bangi unaekelea hivi, unapata pesa yako immediately. Yeah, ndio maana wakoroga napenda biashara kama hizo, unaona. Lakini kuna cash ambazo zinachukua cycle mrefu sana. You start from raw material, you go to finished goods. When work in progress, kwanza finished goods. From finished goods, that money resources goes to receivables. Now from receivables, you get back your money. So in this case, it's a turnaround. The book in this case, ladies and gentlemen, has answers. It will be very important for you to know how to use these books. It has answers at the very back. At the very back, you'll be able to see your answers here. So are you able to see this 83? The final answer here is 83. 83. This 83. And they're explaining to you very well here. They are telling you that the cash operating cycle tells us that it takes X company 83 days between paying out for material inventories and eventually receiving cash back from customers. So as always, this must then be compared with the prior periods or industry averages for meaningful what-year analysis. Now we are progressing. I'm now taking you a little bit higher. Yeah. So now look at this one here. Test your understanding to calculation of cash operating cycle. Calculation of cash operating cycle. So you're told here, Marlboro company, estimate the following figures for the coming year. We have sales, all are on credit, very good. We have receivables there. We have gross profit margin, finished goods, work in progress, raw materials balance held, trade payables, inventory levels are constant. Raw materials are 80% of cost of sales and all are on credit. required, calculate the cash operating cycle. The person who taught me finance long time ago, he told me, whenever you see this gross profit margin, then the examiner has not given you cost of sales, right? The examiner here has not given you cost of sales. You must get this cost of sales. So gross profit margin is 25%. So I'll do a small trading account. Let me do a small trading account to understand my operations. I will do a small trading account where I have my sales. So the sales figure is 3.6 million. And then I have cost of sales. So cost of sales will be 75% because you see gross profit is 25. So can you kindly, ladies and gentlemen, please give me 75% of 3.6 million? Could you kindly give me 75%? Yeah, this book, I'll send it later, Lucy. Sorry for that. So 75% of 3.6 million, I'm being told this will be 2.7, like that. If you subtract, you're getting what here now? 900,000. So this will be your gross profit. This will be your gross profit. And the gross profit, of course, is 25%. They've told you 25% of sales, 25% of this 3.6 million. You can try this, see whether you are getting this 900,000. You can try that. You can try that. Tell me whether you are able to follow what Mwalimu has done. Because whenever you are given gross profit margin, then you must compute this cost of sales. In whichever, even if it's in financial reporting, even if, ladies and gentlemen, it is what year, even if it is, whichever subject. So up to here, ladies and gentlemen, somehow, Bwana Daudi, are we together here? Are we together here? Are we together here? All right. All right. Up to here, we are together. How about the other students? How about the other students? Are they able to follow really? Because if gross profit margin is 25%, then the cost of sales will be 75% because the two must add up to 100%. The two must add up, great. The two must add up to 100%. Thank you very much. All right. Now from there, I would now want to throw the ball to you. I would want somebody in this case here to calculate for me the receivable days. Now you follow your receivable days, finished goods days, work in progress days, raw material days, trade payable days. Pole pole tu, trade payable days. Twende pole pole. Tuanze na receivable days huko juu. Tuanze na ile vitu ya working capital. Working capital ingekuwa na receivables, ingekuwa na inventory, ingekuwa na payables. Na hii inventory ni aina mingi. Inventory kuna ya raw material, kuna ya work in progress, kuna ya finished goods. Lakini kwanza tuende pole pole. Kwanza tafute number of days we shall be able to have these receivables held outside there. So receivable days. Receivable days. So receivable days, what do we have here? Under receivable days. Under receivable days. So under receivable days, I know that I will take receivable. I know that I will take receivable divided by, I will take receivable divided by credit sales, divided by credit sales times 365, times 365. The receivables, I can see there are 306,000. There are 306,000 divided by the credit sales, which I can see, ladies and gentlemen, here are 3.6 million. 3.6 million, 3.6 million times 365. I would want you to give me a whole number. Are you able to give me a whole number, ladies and gentlemen? Are you able to give me a whole number? They're telling me 31 days. 31 days. Thank you very much. 31 days. And then you go back to the question. So you go back to the question. So back here in the question, what else? Of course, we can't have this. Gross profit is never in working capital. But we have here finished goods days, because finished goods is part of inventory. 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 So get ahead there and give me the finished goods. Give me the finished goods days. So if finished goods days are part of inventory, there's no problem. If finished goods if finished goods are a part of inventory, then automatically I will take the finished goods value given over what? Can somebody tell me what should I divide here with? If it's inventory, what should I divide there with? What should be my base there? What should be my base here? What should be my cost of sales? Yes, inventory. Never confuse that. So cost of sales times 365. At times you must have seen in your exams, they're giving you 360 days. If the examiner tells you to use 360 days, you shall use 360 days. So the finished goods we have in our stores, 200,000. 200,000. Divide this by the cost of sales that somebody must have forgotten. Divide this by the cost of sales that somebody must have forgotten. Are they able to remember the cost we got cost of sales somewhere up there? 2.7 million. 2.7 million times 365, which some ninja has been able to get 27 days. Some ninja has been able to get 27 days. Actually, many of them, they've been able to get 27 days. So I don't know whether up to here somehow we are okay. Are we clicking this thing? Are we clicking this thing? Are we okay? Are we okay? Are we okay? All right. Thank you very much. Now, from there, ladies and gentlemen, you will come here. You simply move slowly. Work in progress is part of an inventory. I'll get all the marks very easily. Work in progress is part of inventory. Work in progress is part of inventory. So WIP, this is part of inventory. So WIP days, I will take WIP. I divide this by cost of sales times 365, and the WIP given here, so WIP given here, ladies and gentlemen, is 350. So 350. So 350,000 divided by our cost of sales of 2.7 million times 365. So is there somebody who is able to give us those days? Is there somebody who is able to give us those days, ladies and gentlemen? Anybody who is able to give us those days, you good students? Why they are not talking to me most? They are talking to me. I can see very many charts. Yes, I'm not seeing them. So these are 47 days. These are 47 days. And then, ladies and gentlemen, from there, I can see raw materials. Raw materials, you have to be very, very careful. Because you see, raw materials are part of inventory, yes. But now here you have to be very, 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 very careful. For raw materials, you must be very, very careful. Why must you be very, very careful with raw materials? Look at this. So these raw materials, balance held is 150,000. These raw materials. But now the question is, what should I divide these raw materials here with? What should I divide these raw materials here with? I'm giving you 1 minute and then you talk to me. These raw materials. You can see this examiner wants to just confuse you. Yeah, it's cost of sales, but they're telling you that raw materials are 80% of cost of sales, all on credit. So you have to be very, very careful here. You can see that they want just to confuse you. It's part of inventory, fine, but you can see in this case here, we have here 80% of cost of sales. So then raw material days will be whatever over 80% of the 2.7 million times 365, of which raw materials, 0.8 of sales. User, this student using a machine called user, you must be very good. So 150,000 divided by this times 365. What are we getting there, ladies and gentlemen? What are we getting here, ladies and gentlemen? So when you divide this in your calculators, you will say 150,000 divided by open brackets, 0.8 times 2.7 million, you close, times 365, and then you give me your answer as a whole number. You give me your answer as a whole number. You give me your answer as a whole number. Most of them are giving me 25. Most of them are giving me 25, which is really, really good. Really, really good. So from there, ladies and gentlemen, we move on to something different. 25, that's very, very good. So then we have the last one. This one, I would want to give you 1 minute to try this. The trade payables. Let me give you 1 minute. You try this trade payables. This one I'm giving you exactly 1 minute. You try the payables, trade payables, trade payables. I'm giving you exactly 1 minute. You try the payables. I'm giving you exactly 1 minute. You try the payables. We must impeach this financial management. We must impeach it. We're not talking about politics, but this one, we have to get it out of our way. We must get it out of our way. And I'll tell you the secret. So long as you're willing to pay the price, we must get it out of our way. We must get it out of our way. We must practice financial management, unlike financial reporting, which is a 1, 2, 3 easy subject. Financial management wants lots of practice. We must do lots of work. Haitaki mchezo hii. Inataka just practice every day. You must do like those 5 sums every day. Every day. So remember, for payables, again, you have to be very, very careful. You have to be very, very careful. So for payables, for payable days, you will take the payable given there over credit purchases. And remember, what were you purchasing? Of course, these were raw materials. So the payable days, I can see trade payables 130,000, 130,000, 130,000 over the 80% again of the 2.7. We're buying raw materials times 365. Sorry, I had forgotten 365 here. Sorry for that. I had forgotten 365 there. So then, are you able to give me this answer, ladies and gentlemen? Are you able to give me this answer, ladies and gentlemen? The payable days. How many days are we talking about here? Abdikalu. 22, eh? So this one is giving me 22. This is giving me 22. So then from there, we have our summary. We have our summary for the cash operating cycle. So we have receivable days. I remember this summary, receivable days, they were 31. We have finished goods. Are you able to remember the finished goods days? The finished goods days. Oh, wow. What happened? International disaster. What happened here, really? Oh, we shall overcome. I never charged my camera. That's very bad. Very bad, very bad. Very bad. So in this case here, the finished days, we have 27. We have 27. Then we have the work in progress days. How many days do we have there, ladies and gentlemen? Work in progress days. 47, right? 47. Thank you very much. Work in progress days are 47. From there, we have raw material days. Raw material days. I'm being given 25. And then we have the payable days. So payable days were how many? And these payable days, we must always do something to them. What do we do to them? The payable days, what do we do to them? We less, always. And then you are able to give us our COC, cash operating cycle. We're able to give us our cash operating cycle, of which Margaret 10 is giving us 108 days. 10 is giving us 108 days. Wanjiro is giving us 108 days. So is that correct for all of us? Is that correct for all of us? That's the correct answer. All right. So, ladies and gentlemen, what I will do, I would expect then you guys to look at this question that now you are doing on your own. You shall be able to do this question on your own, on your own, on your own. So they can, this test your understanding 3. Test your understanding 3, you are doing it on your own. You see now, this is what is normally tested in your exam. So they give you financial statements. They give you financial statements like these ones. All right. They give you financial statements like these ones, 2 of them. And then they will come and tell you to calculate the liquidity ratios in 06 and 07, calculate the length of the cash operating cycle in 06 and 07, and then comment on the result and appraise how effectively the working capital is being managed. So like now, this is really a very good one. So under the cash, calculate the length of cash operating cycle, you basically come to your balance sheet. So in your balance sheet, you simply look at what year, you simply look at your current assets. So like now you'll need inventory days, you'll need receivable days. You can't talk of bank days because you see you're getting cash operating cycle. So that cash and bank will be left out. So you have to be very, very bright. So you come to the other elements here, you can see we have trade payables. So you give us what we call the trade payable days. And as you're doing this, of course, you're connecting the balance sheet with what year, the balance sheet with the balance sheet, the balance sheet with the balance sheet with our income statement. And then, of course, you have your answers. But before you check your answers, I want you to try and try this very, very well. Then I have a suggestion, ladies and gentlemen. Which weekdays are you free? Which weekdays are you free? These weekends seem not to be very, very nice to me. I would want to give you 2 weekdays, even if it's 6 p.m. or 8 p.m. Which weekdays are you guys free? Which weekdays are you guys free? Which weekdays are you guys free? Monday, from what time to what time? Monday, from what time to what time? Great. From what time to what time? 8 p.m. I'm also free. I'm free Monday. I'm free on Monday. I'm free on Monday. This is the best decision ever. So then I have to give you guidance. So from today, you know, I've not been very active in your group. I would want to be very active in your group. I like what you guys are doing with Teacher David, but we must raise the note, this thing a notch higher. The efforts are notch higher. So like now what I want you to do, after you've done this question on cash operating cycle that I'm sending you right now, I would want, in this case here, Daudi automatically, you take a leadership role. So Daudi will be able to go around your past papers looking for questions of cash operating cycle. And Daudi, you must give us a minimum of 2. 2 at the bare minimum, which you attempt, and then Mwalimu marks. So does that sound like a good plan? Does that sound like a good plan? Does that sound like a good plan? Yeah, great. So I'm sending you these one. I don't know where I've seen somebody saying that they have PFT somewhere. There's a student saying that they have PFT. PFT, is it true that they have a PFT on Monday? Because I can see there are 2 days. Or they can be fixed on any day so long as I like this kind of a student. I like this kind of, these are positive. I mean, there are those students who have a very good attitude. They're saying, Walimu, I can't be the one blocking classes from happening. You do them any day. So long as in this case, you ensure that you are recording and uploading them accordingly. That's very, very good. That's very, very good. Which case is that? Which case is that? Which case is that? Which case is that? Yeah, watch like that. So then which email address do I send? I'll simply send the group. This book is different. It's not the same book. It's not the same book like the one that I sent to you. I normally work with 2 books. So this is really, really important. And then I gave you a test. I gave you a test that you guys did in your LMS. You are special vision students. How many marks did you get yourselves? Is it able to go to over 50% that test? I'll be revising that test on Monday, right? Yeah. Basic things you guys were not able to do, KE. You guys, I expected you to get that debenture question, 5%, 6%. I expected you to do IRR very well, right? Use that formula. You never did it. We shall overcome. You never did it. We shall overcome. Ah, you got 30%. 30% you must have been number one. 30% you must have been number one. You deserve in this case here a present. So Caro, in this case here, I'll be able to look at that question that I remember. I'll be able to look at. Or later you got 35%. Then I'll be able to pull. I mean, you're a genius. You're a genius. I'll be able to pull those results and then I send my present right away. I send my present right away. Otherwise, for now, given the weekend commitments, let me just rush to something different. So on Monday at exactly 8 p.m., we shall be together. Otherwise, thank you very much. Don't forget to do my homework. Bye. Yeah, I'm sending the book right now kwa group. I'm sending the book right now kwa group. Thank you. Thank you so much.